President Donald Trump has announced a 25% import tax on steel and aluminum entering the U.S., signaling a major expansion of trade restrictions. Despite warnings from Canadian officials, the largest metal supplier to the U.S., and concerns from other nations, Trump remains resolute in his decision. American businesses dependent on these imports have expressed worries, but Trump argues it will revitalize domestic production. Trump emphasized that no exemptions would be made, stating that the move simplifies the system and is set to take effect on March 4th. Declaring the decision as a step toward national prosperity, he insisted that the country needs its metals produced domestically rather than sourced overseas. When asked about the potential price impact on consumers, Trump claimed it would ultimately be cheaper and hinted at additional tariffs on pharmaceuticals and computer chips. As the world's largest steel importer, the U.S. relies heavily on Canada, Brazil, and Mexico. With Canada alone accounting for over half of aluminum imports, it stands to be most affected. Ontario Premier Doug Ford condemned the tariffs, warning they could destabilize the economy, while Canadian steel industry leaders called for immediate retaliation. Liberal MP Cody Blois suggested reducing reliance on U.S. trade, expressing concerns over the partnership's disruption. Following the announcement, U.S. steelmakers experienced a surge in stock prices, with Cleveland-Cliffs gaining nearly 20%. Steel and aluminum prices also rose, though broader market reactions remained cautious amid skepticism about Trump's follow-through, given his history of delays and exemptions. In 2018, Trump imposed similar tariffs, but later negotiated exceptions for Australia, Canada, and Mexico. Analysts now question whether this is another negotiation tactic or a genuine push to bolster the steel industry. Last week, Trump imposed a 25% tax on Canadian and Mexican goods, but delayed implementation by 30 days, alongside a 10% tariff on Chinese imports, prompting retaliation from China. The introduction of tariffs, which function as domestic taxes on imports, has raised concerns globally. These measures, central to Trump's economic strategy, aim to protect American jobs and increase tax revenue, but have sparked fears within U.S. industries that depend on these materials. During his first term, tariffs raised steel and aluminum prices by 2.4% and 1.6% respectively, despite multiple exemptions. Stephen Moore, a former Trump advisor and Heritage Foundation senior fellow, expressed doubts about the tariffs' ability to create jobs, viewing them as a strategy to draw global attention. He described Trump's actions as typical negotiation tactics. Trump's officials maintain the tariffs are designed to block countries like China and Russia from circumventing duties through intermediaries. The new rules require steel to be melted and poured, and aluminum smelted and cast in North America. Nick Iacovella from the Coalition for a Prosperous America highlighted concerns about steel imports from Mexico while underscoring Canada's trade surplus with the U.S. He suggested Trump sees both Canada and Mexico as exploiting trade relationships with the U.S.